Hello everyone and welcome back to my channel. As of every week, we will jump into the fundamental, sentiment and technical analysis of different currency pairs to see which opportunities we have during the next week. Now, let's start first from the fundamental perspective. Fundamentally, the US dollar, Australian dollar, pound and Japanese yen are still the strongest, but as you can see, the sentiment of the fundamentally strong currencies are very weak, and the Japanese yen is strong and the euro is weak. So, from the final ranks between fundamental and sentiment, we have the Japanese yen very strong and the euro is very weak. So, we are looking at the euro JPY pair to trade during the next week. Now, from a technical perspective, we have the Euro JPY at the 100 and 200 moving averages, and we have the RSI at the 50 area, but I need the price to reach above the RSI to reach above the moving average in order for me to have an opportunity to take an entry. For example, an entry could have been at this area right here if fundamentals and sentiment were aligned, but it was not aligned. That's why I did not take any trade on this pair. So this is the only pair I'm looking at to trade after this week for the next week. Now let's see which days we have opportunities to trade the Euro JPY. So we need to see data coming for the Euro and the Japan. Starting with Monday, we have the average hourly earnings, cash earnings, and we have the balance of trade for Germany, which will affect the euro pretty much. And we have at 12 the retail sales year on year and month on month for the euro area. Now, since we have different data coming out back to back, I will wait for the last data to come out, which is at 12 p.m. local time, in order for me to see if there is opportunity to take this trade or not. And based on Monday, there is a lot of opportunities on Monday to take a Euro JPY trade if everything aligns, meaning that the balance of trade of Germany needs to come below expected. Excuse me. And the average cash earnings year on year for Japan needs to come at 2.9 at least, or if it's above 2.9 it would be much preferable. And then at 12 p.m. the retail sales month on month, I focus on month on month, needs to come below 0.6%. This will give us idea that the sentiment is shifting with the fundamentals and the data right here. Now, this is for next week's trades opportunities and pair opportunity. Now we will do a trade recap on the euro pound that I took and why did I lose this trade and what I am focusing on now in the markets. So if we come to the hourly time frame, so I entered right here, okay, and what happened is that data came out lesser excuse me, less than forecasted. So what I should have entered at this area right here, but I waited for another retracement and I entered. Prices first retraced, then started pushing to the downside. Right here at this wick is when tariffs were announced by Donald Trump. Prices did not hit my stop loss technically, but on my broker, the wick did not get into my stop loss, but I got floated and I got stopped out. And then we had shift, and then fear of tariffs uh, started coming, especially in UK area, and this where we started seeing price going to the upside. Also, some data for the pound came out negative. The pound was here alongside the Japanese yen, but it jumped. So the sentiment for the data came out not good, which gave a fuel for this pair to move to the upside, and this is how I lost my trade. Also, because of the loss of this trade, I am now hugely focusing on tariffs and how tariffs will play a huge role in the markets. So we shall see what business deals will happen between the US and different countries, and if it will play out as Donald Trump expected, or we will go into a recession. So now, because of the fear of recession, if we jump into the index market, you can see the S&P was down on Friday 6% approximately. So now we are down around 18% on the S&P 500, and we are well below the average price. Hopefully data is still bullish for the S&P 500. But what's happening is there is fear of recession, which usually markets react based on rumors and based on forecasts and expectations. So the USD interest rates are still neutral, but the last meeting they said they will hold right now interest rate, and there might be some increase in interest rate because inflation is so the tariffs are very inflationary, and inflation is not being controlled. So that's why now the next data will come out if inflation is not controlled. So the S&P will become bearish from an inflationary point of view and sentiment point of view, but overall still GDP very strong, unemployment rate not, but GDP strong, and inflation is still going down right now. So these reactions are happening because of the fear of the expectation that the economy will not do good in the next year, 2 years, or even because of tariffs, it might get into a trade war, and there will be a huge recession, not just in the US, but the overall economy. And if we can jump into the fix, we can see that we are at near the highs of 2024, and we are in a very high risk of sentiment. So people will jump maybe hugely into the XAU and into the Swiss franc. So maybe if we go right here and we write, let's say USD chef, this is the tariff announcement. As you can see, the Swiss franc got very strong against the USD. Why? Because the Swiss franc and the Japanese yen, since the problems are happening in the US, the Swiss franc will have higher tendency to be bought because it's a safe haven and we are in a very high risk of sentiment. And as you can see, the sentiment is playing out right now because there is fear of recession in the US. Also, not just Swiss franc against the US dollar, we can take different currencies, let's say Swiss franc versus the AUD or NSD, because they are marked as risk on currencies. So, NSD chef. As you can see, the Swiss franc is getting stronger and stronger. Why? Because of the risk of sentiment. So there is a lot of things that I'm still learning because in the past 3 months I was just having my trading decisions based on fundamental strength and economic indicators sentiment strength. But now I am following different financial news to study the sentiment and some political news that will affect the markets and the markets sentiment overall, not just based on economic indicators, because when there is news like tariffs, like different policies, political policies, they will have a huge impact on the markets. And if I had this knowledge before tariffs coming out, I would have exploited this knowledge and took advantage of it to make a little bit of money. But the overall is I'm still learning, I'm still profitable, and this is what's important for me. Now, let's jump into the XAU USD since this pair is hugely reliant on risk of sentiment. So when people are fear, they have a lot of fear, they will jump into XAU USD, into Swiss franc, and into the Japanese yen. And that's why on the EURJPY pair, I have more conviction that this pair might go lower. EURJPY, the Japanese yen, will have higher strengths, not just because of the fundamental and economic indicator data, but also because of tariffs and uncertainty in the US, and overall global markets are in a risk of sentiment. So the Japanese yen will increase in the demand of the Japanese yen will increase, the demand of the Swiss franc will increase, and the demand of XAU USD will increase. And there is a lot of nuances on how to enter the markets based on sentiment. Some people just scalp it and they trade it, but sometimes it can get into 1 month, 2 months, like what's happening right now, because of updated news and uncertainty, and this could happen. So, coming into the XAU USD, as you can see right here, I have also BTC USD, but XAU USD gold market, we are in a great area to buy from if data comes out negative for the US, and if there is also more fear of recession and more uncertainty. So there is the fear index that you can follow, news, you can follow not just for the US news, any major political news, like for example, Euro having reciprocal tariffs on the US or different countries. So if we enter in a trade war, the XAU USD will increase, the Swiss franc will increase in value. So we have different opportunities to enter the markets. So, and from technical perspective, we are hitting a good area of $3,000 per ounce in order to position ourselves going long with the sentiment. Now, for BTC USD, usually the Bitcoin is seen as a risk on asset, which means it's like typically moves like the US 500. Now we are retracing, we are in an area of consolidation, and if the fix, in my opinion, jumps down to the risk on sentiment and the sentiment changes, BTC USD will continue to move higher. I am not yet trading the Bitcoin, but I'm starting to look at all different assets class from forex, commodities, indices, crypto to study the market sentiment. So all the market sentiment and see how this will affect my forex trading, and also if there is any opportunities during alongside the forex market from indices market or crypto market or commodity market, I will start building up on it. Let's say, for example, this is the Australian index, so Australian 200 cash, boom, down 5.15% on Friday, just Friday. I am bullish, but because of risk of sentiment, all in the indices across the countries, tariffs hitting global economy, trade war all over the globe, this will affect all the countries, which will give us advantage to make a little bit of money or a lot of money if you know how to position yourselves. Hopefully, this will not continue like this. So maybe there will be agreements between the countries, and after agreements, it will immediately start to pick up, whether it's the US 500, the Euro stock, the Australian stock, the UK stock. Why? Because fundamentally speaking, they are bullish. Now you come and tell me that, for example, the Canadian stock TSX will not pick up hugely, will not have a very powerful recovery because the fundamentals are saying against it. But if, for example, the Swiss franc, the euro, the Australian, the pound, Nikkei, we have a bearish sentiment on the interest rate. They are in a hiking cycle, but they are below 2%. So if it's way controlled, also this index, the Nikkei, could increase. And we have the US 500. Fundamentally, it's bullish. Unemployment rate is a little bit somewhat not good, but it's still in the ranges. So 0.1% difference is not a huge deal. So overall, we are bullish on SPX, and data actual versus forecast is coming also bullish, but there is one problem of tariffs and risk and fear of recession. This is playing a huge role on the markets right now, but you should not have fear. You should react based on data and rumors coming out. So hopefully, just one rumor, for example, let's say Trump sat down with, let's say, China, and they offered some trade agreements. This will give boost for the people to see that, oh, okay, tariffs were not just to tax people or tax countries, but it is for having trade agreements which will boost and give confidence to the people that what Trump did will be beneficial for the markets, and it will the trades will become easier, lower taxes, lower TVA for imports and exports for the US, which will increase its economy and strengthen its economy, and the S&P will start to pick up, and we will start in the boom phase of the political year of Trump. But if it does not play as Trump is expecting, we will have a great recession. So right now we are in as uncertainty, and when we are in uncertainty, it's highly preferable to short the market or stay away of it. So I'm staying away of it because usually stock markets will increase with time, and that's why they invest in the stock market, because company that has a good profits and a good balance sheet, they will increase in profit and increase in value along with time. That's why I never short them, even if sentiment is playing against it. I just long the index market from US 500, UKX, SX5E, any stock market when the fundamentals and sentiment are playing out, and we have booming cycle in the country. Hopefully it's a good way to invest during these times. Now we are retracing, hopefully it's a retracement, and maybe it doesn't stop right here, maybe it comes way more down to the downside. We shall see how countries will react to tariffs, and if there is any trade agreement, this will start to pick up to the upside. So if we want to see a 20% retracement, there is, let's say, 17.5, so there is around 3.5% more to go to the downside before starting to pick up. Usually 20%, 10%, 15% retracements are good, but there is more to it. We need to wait, we need to see, because last retracement was 27%. Okay, we shall see how trades will affect these stock market and the sentiment and the uncertainty, and based on it, we shall see when it's a good time to buy this index and go to the upside, or even other indices. So this is everything for today. A lot of talking, uh, a little bit of analysis. Why? Because now tariffs are playing a huge role in the markets. That's why it's preferable to stay away. Or if you know how to trade these times and how you can manage yourself properly, you can take advantage of it. Some people are very flexible, and they are sharp, so they know that tariffs, okay, there is a change in the market conditions, we need to trade based of it. Okay, I took some time to learn it, but hopefully now it's not just about tariffs. Anything that can change the market conditions, I will follow it, I will study it, and I will react to it as fast as possible to make money out of it. Okay, this is everything for this week. Hopefully it was beneficial. If you like this type of content, don't forget to hit the like button and subscribe for weekly analysis like this. Until the next week, stay safe.